Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back. If you wouldn't mind doing so, if you haven't already done so, please subscribe to the podcast on any one of your favorite channels. It's on 30 different channels, including Apple, the big one. Whichever one works for you, that's great. And while you're out there, please visit globalinvestoragent.com. This is the website where you can find trained real estate agents who are trained to work with you and I, the investor. They're not your typical agents. They know how to identify, analyze, negotiate on and off market deals. Okay, so we're not just all about real estate here. We talk about all kinds of things: gold, silver, crypto, you name it, building businesses. And a lot of it has to do also with playing some defense. How do you actually protect what you've got? And how do you leverage what you've got to be more independent? Sometimes we call that being an infinite banking, right? So I got some great guests today. One I know very well, Shannon Goldsmith, is a dear friend and a former student, and a new friend, Mike Olson. So Shannon and Mike, thank you guys very much for taking your time to be here and share your wisdom with everyone.
Thank you for having us.
Awesome. Hey, if you wouldn't mind, people have heard the term infinite banking and more in the last few years than before. And it's, I know we have the history of life insurance going back, literally hundreds and hundreds and hundreds of years, but universal life came out maybe a couple of decades ago. And then now in index universal life came after that. But if you wouldn't mind, maybe Mike, we'll start with you. How did you actually get into this? And paint a picture for us, and then talk about a little bit about what you and Shannon collectively do. And then Shannon, I want to have you tell everybody a little bit about yourself too when we get to that.
So I got into the financial services business in '95 and happened to have a little bit more interest in the insurance world. So I kind of came through the life insurance side, but became a CFP. And through those 28 years, I really felt the challenge of dealing with business owners and how do you help them make decisions and diversify and deal with Uncle Sam and make really smart balance sheet decisions. So my kind of career path evolved to kind of getting into the more sophisticated life insurance world that is used very differently than the kind of what you think of when you're dealing with entrepreneurs, high net worth and high income individuals. This insurance strategies become more tax driven, more asset kind of protection driven. There's all kinds of very creative and unique things you can do on the balance sheet. So that is where kind of WealthPoint evolved to. Currently is we work with a lot of really, really sophisticated professionals around the country, helping entrepreneurs and high net worth individuals kind of look at their balance sheets and combine that with the risk strategies of, gosh forbid, what if something happens, and how you can make really creative things using life insurance, solve a lot of problems.
Okay. Well, that sounds awesome. And then you're lucky enough and blessed enough to meet Shannon along the way. So Shannon, for those of you listening, Shannon and I actually known each other for a while. And if you ever have the opportunity to meet her and work with her, consider yourself blessed. I mean, she's truly one of a kind. And Shannon, you always have been really good at like networking, connecting. It's like the people I know, you know her. I know it. It's like, I'm just always amazed by that, how you're able to do that. But would you mind giving any people a little bit of background on yourself too, and how you got to where you are now?
Of course. So my story is a little convoluted. How I found life insurance, I think that could be a whole other hour of a podcast. So, when I started to break out on my own, I was an employee and wanted to then become an entrepreneur. And I didn't know how I wanted to focus that energy. So I started in real estate. And obviously that's how you and I met, Gary. And I quickly knew that traditional real estate wasn't my thing. I was much more of an analytical girl. So you introduced me into the wonderful world of real estate investing. I loved everything about it. I loved the analytics. I loved the spreadsheets. I loved the data-driven decisions. I loved that you could move people from a certain position in life and really set them up for a solid retirement down the road. That was all very exciting to me. A lot of life changes happened in between then, as you know, Gary, which took me out of the real estate world. And so I had to find my next thing. What would that be? I still loved financial services, investing, analyzing my spreadsheets, and life in its magical way brought me to life insurance, which is surprising. Never thought I would do it. But since I've been in it, it's been such a blessing to me. And you've always said, out of your greatest problems can become your biggest opportunities. And that was truly what this was for me. It was a big career change at a time when I needed it. And when I got into it, I didn't know what I didn't know. I was like most of the world. You know, we think of life insurance as a very simple application for the most part. You buy it, it protects your loved ones if you pass away, so that way they could continue to pay the mortgage, take care of their kids and their family, whatever the case might be. But as I started to move through that, I discovered that there's a lot of tax advantages to life insurance. There's a lot of tax advantages to cash value that can grow within a life insurance policy. And of course, there's a lot of really smart people out there that learned how to be creative with that and use that as a tool. So using life insurance, not just as the death benefit, but using it as a balance sheet tool. And that was really exciting for me. So as I was continuing to dive in and tackle this new career, I was getting really excited about the application of that. And sort of in this world, we call it advanced market. So, but through that discovery, I also learned that it's a lot more intricate than what a lot of people realize. So for any investor, real estate investor that's considering using a life insurance policy or the cash value from their life insurance policy to buy investment properties or other types of investments, it's really important to know the inner workings of a life insurance policy, because there's the right way to do it, and there's not such a good way to do it. And unfortunately, the only way to really know if you're in the right situation is to really do the heavy due diligence. And a lot of times we don't get exposed to that. So that's how I met Mike Olson. My discovery of life insurance in these advanced markets made me crave that type of career path. And I found WealthPoint in that way. And it made me realize that there's so many things that you can do with life insurance, especially as an investor, especially as an entrepreneur or a high net worth individual, that I didn't even know about. So I made the change to come to WealthPoint. It's been very exciting ever since.
Nice. So now you guys work together, and I'm sure you've got the team dynamics worked out. But let's bring in the consumer now. Obviously, we mentioned real estate, and a lot of people that know the podcast or came from some way, shape, or form, something involved with real estate. But how can a real estate investor, let's say a business owner, they own their own practice or their own consulting firm, and they realize they need to build for the future, acquire some income producing assets so that they can eventually ride off in the sunset and have their money working for them. And along comes IUL. So take us from there. If you guys want to work together on, if someone came to you, what the conversation looked like, how would you talk to them about utilizing these policies to help them, right, to achieve their goals when it comes to investing and other things in life too, for that matter, you know?
In our process, Gary, I think what Shannon really alluded to there is the every client is different. Their balance sheets are different. Their family dynamics are different. Their time horizons. And we think the real art is helping an individual kind of crystallize their balance sheet and how they want their life to play out. And they have all these investments that they have either more knowledge in or more of a passion in. So it might be real estate, it might be an operating company, right? It might be a professional services organization, whatever that is. Those are where the majority of their assets are going to be. And that's where their focus is going to be because of expertise. Really, where insurance comes in is one of those assets where you can take some of those eggs, those golden eggs that come from that business, and place them in a war chest. And insurance can become that really, really tax efficient, creditor protected, depending on the state you're in, war chest that is on the balance sheet along with all the other things that you choose to put on there. And then you design it to carry out a mission. So like you said, passive income. So a lot of entrepreneurs and really strategic thinkers are thinking, I want to build my balance sheet so at some time I have all of these income streams. I can quit work if I want, and I have income. Insurance is a great option for one of those, and it's tax-free. So it behaves like a Roth IRA. So the secret is how do I build it to get the income I want with the risk tolerance I'm willing to accept? I'm taking a lot of risk in my business or with real estate, whatever. Maybe I want this to be very conservative, right? We can control a lot of the variables to build it so that at some time in the future, at your choice, you can flip a switch and create tax-free income. But along the way, if you need a chunk of money to buy an investment property, fantastic. You can come, pull money out, do your project, pay it back later if you'd like. So I've done that multiple times. So I think the real secret is taking the passion and the vision of the entrepreneur and then saying, great, how are you taking your career path? Now insurance, great. Does it make sense? And is it a good asset to put on your balance sheet? So everything's working together towards that future goal of that passive future income stream down the road.
So really, you'll take in a lot of information. In other words, it's not just about the policy itself, it's how the policy is part of an overall more comprehensive plan, you know? Well, let's talk about the features of a good policy, because in the old days, my first experience with life insurance was, hey, you either got term life or a whole life, and term life is very inexpensive, but it's meant to be for a certain period of time, a term. And if you renew it later on, it's probably going to be more expensive because you're going to be older, you know? Whereas whole life, you lock in now while you're young and the rates are low, and then in the time you've got this great product that's sitting there with a lot of value. But other than that, that was my experience, and it's really evolved since then. But when it comes to the policy itself, so kind of if you could give an example how someone can leverage that policy to say like investing. It doesn't even have to be real estate. They can maybe invest in a mutual fund or a particular business that's going public or something like that. What does that actually look like? What's the process for that? Do you have to wait a year before you can do that? Can you pre-fund it so it's already there? I know every case is different, but kind of walk us through, if you don't mind, what that experience might look like.
Well, I would, to kind of take one little step back, is what makes a good policy. You kind of alluded to that. And the secret to building a good policy that you're going to use, and the main focus is the cash value. Okay. You want to minimize expenses and costs associated with that policy itself. And part of the expertise or uniqueness of WealthPoint is having all the carriers and not really caring which carrier, but 2 is knowing which products you are good at certain things. But 3 is you can choose to reduce some of the internal expenses within a policy to make it perform better. And you can design it certain ways that are contradictory to how much money we make. Okay. So, right. So you have to purposefully do all of these things to reduce the costs, expenses, to set the policy up to have the most cash value in it and the ability for it to grow as much as possible. So an enormous part is that initial design and having the ability and knowledge to create that, and not just use a normal street insurance policy that's out there. And that's unfortunately what happens a lot, is a lot of the products that are sold are the traditional basic policies that aren't really built to optimize this, right? So I think that's step 1. And then step 2, and then I'll let you, Shannon, jump in, is once you have that structure, the reason that insurance is very tax efficient is that under the IRS code, it allows you for the cash values to grow tax deferred, and then you can pull money out of your policy via a loan and avoid taxation on the gain. Okay. You never have to pay that loan back, right? So that's technically what's going on, Gary, is you have, once the money's in there, it grows, you don't have taxation at, knocking at the door, then you can borrow money out and never pay it back or pay it back, right?
Okay.
You pay yourself some interest, you can do different things there, right?
Right.
But what's the cost of that loan, right?
Mhm.
That's where designing the right structure, understanding those costs becomes really important. So what happens a lot of times is you load up this war chest, like you alluded, in my opinion, you usually want to let it fester for a couple years before you pull it out, so it can get going and start the leverage of the tax-free efficiency.
Okay.
Then pull out of it. You can invest in a project, whatever that is, or company. And then you have the complete flexibility of paying that loan back on your terms,
Mm-hmm.
in a lump sum, monthly, in chunks, whatever it is. So you have the freedom to allow this investment to take its course to accomplish its goal before you have to pay it back, versus a bank loan has structure and rigidity to it. So you have a lot of flexibility. Pay it back and then you can do it again, right? So it is a really flexible thing that you just have your own chunk of money that you can borrow from on your terms versus going to the bank and working on their terms.
Okay. Hey, Shannon, is it possible then, so a policyholder can borrow from the funds, the cash value, but can you also borrow against it? Like take a loan out that's backed by the value of is there different ways to do that that consumers have available to them?
So that's a good question. And Mike, you might need to jump in here to get more on the specifics of that. But yes, you can borrow against the value of that, of the cash value within the policy. But there's certain things that you need to watch out for with that. And that's again, one of those WealthPoint pieces of knowledge that I've been exposed to that isn't really readily out there. So Mike, if you could just explain about the interest rates within policies and how they work within loans, and what type of loan you want to have within a life insurance policy if you plan to borrow it against it, et cetera.
Yeah, and Gary, what you were alluding to, you also have the flexibility to take that policy to the bank and say, this is going to be my collateral. I want to borrow from the bank. So that was a strategy done a lot when the interest rates were really low at the banks. It made more sense to take this thing to the bank and use it as collateral because the bank interest rates were so low.
Okay. Yeah.
Rates have increased. Now it might make sense to borrow from your policy, but you have the complete flexibility to use whatever strategy depending on what the rates are and the time frame of how long you think you're going to need that money. So you have both options all the time.
Yeah.
Some policies are better for collateralization than others, though. That's one thing just to be very cognizant of.
Well, here's something, and I'm just thinking, me, Shannon, I'm Mr. Think of create creatively. So if I borrow money from a bank using the policy, collateralizing the policy, I have to pay the bank back, right? Whatever they're charging, 7%. But in the meantime, that policy is still growing, right? It's still growing in value. But what if I borrow from the policy? I borrow that out of the policy. I guess at that point, I'm actually paying myself back, like whatever rate I pay. Is that right? But is the policy no longer growing on the funds that I pulled out, or is it still, the policy still growing on the whole, I guess the what I would call the paper amount or the amount of the policy? I don't know if I'm making sense, if I'm asking the question the right way.
There's policies that work in both methods.
Okay.
So one of the items you're describing is you go borrow from the policy, and the policy, the insurance carrier is going to charge you 7% interest, but inside the contract, it's earning interest, right? So the cost of the actual borrowing might only be 1.5 points, right? Some policies that can be what they call zero wash loans, which means when you borrow that money, what the bank charges you and credits you back is the same. So So there's different types of loan structures within these different types of policies that you need to be very cognizant about. And in our short period of time, it's hard to go through all of them, but
Yeah.
the answer is yes to your question, but just, and that's where, when we talked about upfront, how do you want to build it?
Mm-hmm.
How somebody would use that money, how often would they loan it to a business, or would they use it for real estate, would kind of help determine which policy structure you would use, and then what the loan structure that comes with that policy, how it behaves, right? So there, and to answer your other question is yes, within whole life contracts, there is it's called fully participating non-direct recognition versus
That's a mouthful.
yes, it's a mouthful. In that fully participating non-direct recognition, what you alluded to is with that carrier, when you borrow money out, they're charging you interest, but they allow, as if you never borrowed money, to get the full crediting rate back into the contract.
Yeah.
Versus some policies, when you take the money out and you borrow it, it is not earning interest on the money that you've borrowed out.
Gotcha. Okay.
That can be good. It just depends on the contract that you want to, because there's some negatives that come with that, depending on how you do it.
Right. And I'm guessing earlier when you mentioned there's expenses you have to be aware of too. When you build your policy, you've got to think through whatever features you have, how much is that going to cost you? And even I guess some of these are riders, so you can buy riders, but without the riders, is that so am I assuming correctly that these different features of these policies, being able to borrow in one way versus another, that could that incur different level of expense to the consumer? We'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in, because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them, as well as from me, how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast.
Yes, the policy structure will have a certain cost structure to it.
Okay.
And, right, cost of insurance being one of those, right, that comes with the policy, but also what's going on internally that's making the cash value grow. And some rigidity occurs with certain policies. So in others have more flexibility. So yes, that you really need to be cognizant of what you want it to do, so that the policy that you're building fits that and has the minimal amount of costs and expenses to accomplish that. And that's the thing that I would say warn or kind of share is, we see a lot of these infinite banking / bank on yourself strategies sold because they're great and they sound great, but they weren't implemented and followed through on. And now they have very inefficient insurance chassis as a war chest.
Okay.
And fixing them. So my suggestion is always, right, do more due diligence up front, spend more time kind of building it, analyzing it, and being purposeful, versus the strategy you heard from a friend that sounds great. It might fit them, but it might not fit you. And if you implement the same thing, it becomes a costly, or not a less efficient, more expensive option than what you could have had. And once you have to repair something, as you know, versus just do it right in the beginning, it's just not as cost effective.
Right. Gotcha. Okay, now when it comes to riders, what are some of the riders that, like, I guess again, it just depends on the consumer. So maybe we can take an example, like somebody who comes to you and if they're nearing retirement, they're maybe 60 to 65, they own a practice, medical practice, dental practice, something like that, and they're thinking, gee, I don't really have a solid plan. I mean, dentists have a famous saying, they say they're afraid of being stuck behind the chair. They are their practice, but and they've got, let's say, maybe still one child in college and things like that. Could they get a policy that survives them? Like if I don't know if I'm saying this right, I know they have beneficiaries, but is there a way to have that policy taken over by a spouse? Let's say one spouse passes away, for example. Is that a type of rider you can get? And what about the child? I mean, maybe paint a picture for us there, and maybe they want to also buy some income producing assets, also assuming they're going to be around for another 25 years,
Yeah, so I think there's two things that go into the design from the long-term goals and objectives of an entrepreneur. Is one is themselves, of cash flow and how am I going to live? And then two is the legacy component of protecting the family, kids, for whatever the goals are. So a lot of times what we're helping, I'll give you an example, a dentist that we know that is making very good money. And like you said, his practice is very successful. And then they're working through what's my succession with that business going to be. And we have a 401k and defined benefit plan in place. And we have a brokerage account that has, $1 million in it. And this insurance became a conversation. So one of the things that we talked about was, where is money going to come from in the future? And what is the tax consequence to that? And then the beauty of insurance is it can become a tax-free source in conjunction with the other scenarios. The other challenge, or not challenge, but goal was, I want to make sure that, a couple of the income sources did not continue at the same pace if he passed away, to his younger spouse. So it's, how do I fill the balance sheet to make sure that that income cash flow can live on? Well, an instinct would be, can we keep this policy spitting off the tax-free income? Well, another solution is, if we make the death benefit a correct amount, that comes in tax-free too. So he could live on that money till he passed away. Then all of a sudden, $1.5 million comes in tax-free. Now she has that to replace the income that was coming off of this life insurance policy for her remaining period of time, right? So you can be very strategic to solve legacy and, the cash flow needs. And there's so much flexibility to build this to accomplish various things. Yeah. Another strategy was two adults, parents were uninsurable, but their adult child was, and they basically did it. What you were thinking was, they chose to have the insurance on the child's life. They owned the policy, so they could control the cash value and taking the income. And if they passed away, that remaining policy would pass to the child. Okay. Right. So that was another creative way to solve what you want, which is, I want a bunch of tax-free money, I want some credit protection, and I want to be able to solve some legacy issues. It's just a matter of who owns the policy, whose life do you use as the insured, and you can get very creative in that. Yeah. Okay, that helps an awful lot. And something else, another question I was thinking of is, sometimes people have, they've got a nice pile of cash somewhere. Something, an investment came due, they sold the property, what have you. Is it possible to pre-fund a life policy? And if like, how much can they pre-fund? I'm sure there's limits on that stuff, but what kind of guidance can you offer there? Right now, with the interest rates going up, there's really fantastic programs. One of the carriers has, when you, let's say you want to put $1 million in, because that's the amount that you eventually want to have in that policy growing for you.
Mm-hmm.
If you put it all in year one, the rules make you buy a lot of insurance. So usually you want to spread it out over 3 to 5 years. That allows you to buy less death benefit, which reduces the cost, the internal expenses, commission, all that kind of stuff. So what one of the carriers has is what they call a premium deposit account, where you can give them the $1 million, the carrier, and then they will put it in over a 4 or 5 year period of time. And I think they have up to 10 years. But while it sits in this premium deposit account, it's paying 5% interest.
Okay.
So it's a great way to kind of get things from one balance sheet to the other, but still get a good return on kind of your cash. And then it'll go into the policy slower, which allows you to build a more efficiently priced insurance policy, so you can have more cash value and more potential tax-free income.
Okay. And on these policies, I guess just like a whole life, do you only pay for a certain period of time? In other words, even if you pre-funded to a certain degree, you can have a payment schedule, I guess, a premium payment schedule that eventually you will no longer have to make payments on the policy.
You can design it. You can build it to do whatever you want. So we have a lot of 60-year-old professionals, for example, that say, I want to fund it till I'm 67 and done working. Then I don't want to put more money in, or that's when I'm going to retire. So yes, you can be very purposefully in controlling the premium schedule or the funding schedule, so that it works in conjunction with your career path, right? And your time horizon, right, of working or creating income.
Okay.
I had one rider that I think we're having lots of conversations on these policies now. You can add a long-term care rider.
Okay.
A lot of them, which has become a real conversation around the risk associated with the expenses of care. And that is a great way to kind of tackle that, because what that rider does is, if you had $1 million policy, for example, and you had $1 million long-term care rider, what that means is they allow you to accelerate that death benefit, the $1 million, to pay for long-term care costs. And then whatever's left over that you did not use just passes to the beneficiary as a tax-free death benefit. So it gives you kind of, I would say, a Swiss Army knife, but it gives you this bucket of money of $1 million that somebody is going to get no matter what. It's just a matter of how they get it, whether you pass away or if you use some of it for long-term care. So it's not like a traditional long-term care policy where you could pay premiums and never use it and lose all those premium dollars. You're always going to get something. So that's a great rider that is very, can solve a lot of problems. In addition.
Well, let's face it. I mean, with medical technology, we're all, statistically living longer and should live longer, and I've seen my fair share of medical expenses over the years. I'm telling you, they can really add up. I mean, oh my gosh, hundreds of thousands of dollars. And people don't think that. Well, I've got insurance coverage. I'm covered. I pay my deductible. I've got out of pocket, but often those plans, those medical insurance plans, have limits on them, particularly if you're working for an employer. Like you've got, $1 million per event and $5 million for a lifetime. So this sounds like this could really pick up where that kind of stuff fails, or I shouldn't say fails, where that falls short. Sounds like this is where you can really protect your nest egg. Because there's people. When I was a kid, $1 million was like, making $1 million are good. Now it's $10 million. You gotta have $10 million to live the lifestyle you want. I mean, who knows? In a few short years, it'll be $100 million. But it can all go. It can come and go pretty quickly. So, in the beginning, I talked about some of the clients I knew earlier, or friends, I should say, that really were just buying life insurance just to really, ensure their family had the lifestyle they were used to when the policyholder or whoever the policy on them had passed away, because generally they had built a family business, and I've seen it before, particularly in restaurants. They just, unfortunately, the business dies soon after the founder dies. It's sad to say, but it happens an awful lot. But what if you guys? I know we're getting short on time here, but if you guys could talk to people in advance, you've got a world full of professionals and business owners that really need to do this. What are some of the things you've seen that you wish people knew more of even before talking to you? What do you wish you knew? How can we more educate them, ahead of time,
Well, I can say first and foremost, don't underestimate the conversation. Life insurance is a hugely important topic that I think, unfortunately, a lot of people, underestimate the application of it, how intricate it can be and how much it can affect not only your business, yourself, but your loved ones. And if you are a business owner, if you are an investor, you absolutely want to talk to somebody that not just will give you the retail version of a life insurance policy, but engineer it for you to fit your situation. So that way it's performing the way that it needs to. Mike says it best, 85% of the time that we see a policy or do a policy review, in most cases, that policy is not performing the way that it was told it would, or the client thought that it would be. So don't underestimate the value of the due diligence and getting the right advice by somebody who lives and breathes this as a craft.
Yeah. Well, let's jump ahead to the, what's next. People who are listening, and they realize I've got to take this seriously now. What does that look like, Shannon? They first contact you, or is there an interview process, or how does that whole thing work when people are starting to take the next step with this?
Yeah, sure. Absolutely. Well, it first starts with an easy conversation just to understand what the need is. That even though we believe in the power of life insurance, we don't always believe it's right for everybody. So we always want to discover first if you need it. So it's just a very upfront initial conversation just to get an understanding of what your situation is, where you are in life, what your financial goals are, what your balance sheet is. And from there, we can start to design and craft a solution that can solve for one issue, multiple issues using these life insurance policies, whether it's to build out a Roth-like vehicle and have this tax-free income distribution in your retirement years in life, whether it's just strictly for a death benefit, whether it's for a key man policy if you have partners in your business. There's multiple applications of it. And of course, adding on a long-term care policy, those types of things. Mike, is there anything you wanted to add to that?
I would just add that if you have existing insurance, right, a lot of times what we're helping with is when it was originally purchased, there was a situation and a plan. And then 10, 15 years later, the situation's very different, the plan's different, and the insurance isn't aligned. So the other thing I would suggest is if you have an existing policy, great. Please, we're welcome to help just kind of navigate the conversation of what do you have? Why do you have it? How did it fit before? And what's the situation look like that's different? And then is there ways to enhance the existing policy you have, or does it make sense to restructure and redesign? So a lot of times the existing insurance isn't aligned with the new set of family goals and objectives. So be cognizant of that. And we're happy to help with any of those conversations to help you just kind of get a real good sense of what you have.
Yeah, and that's where really the whole point in the beginning about everybody, every story is different, every life is different. And I really appreciate what you guys have done today, because I think you've done a marvelous job. It's because what you offer really is so highly customizable. It's not like you can give a canned answer and, well, this is what you do. It's either A or B or C, because it's not like that. We're all different. And I think you did an excellent job of educating people and, helping people realize that they do need to take this seriously, especially if you have a business, you're a professional, if you're the sole breadwinner, what's going to happen if something happens to you? Number one. Number two is, what kind of lifestyle do you want to lead later in life? Are you prepared for that? And this is a way to provide protect, play defense and play offense, So I'm Shannon, I've been a fan of this for quite a while, and every time I talk to you, I learn more and more. So this helps a lot. Mm-hmm. Hey, how about how can people get a hold of you? How can they reach you and have that conversation?
Well, there's multiple ways. You could email us. You could call me. I'll give you my direct phone number. It's 310-779-4679. Gary, you might post it for everybody if they need it. Okay. And then we can also provide our email address, fgoldsmith@wealthpoint.net. Always remember .net. It's a different, But we would be happy to help. Just see, whatever it is that you guys might need.
Okay, so we're gonna put this in the show notes, guys. That way, people who listen to it typically will grab it off the site that has all the show notes. So it's 310-779-4679.
Yep. Okay,
and then sgoldsmith@wealthpoint.net.
You got it. Okay,
real easy, guys. sgoldsmith, GOLDSMITH @WealthPoint. Okay, WEALTHPOINT, and remember the .net. It's like Comcast used to be .net. This is .com, and where is it? So, okay. Well, listen. Any final thoughts, words of wisdom before we call this one a wrap?
Mike, you're the Rain Man of insurance. What are the final thoughts?
I would just to add on what you said, Shannon, is if you're high income, high net worth, an entrepreneur, and you have an asset, a balance sheet, and it's growing, that is the perfect time to just have a conversation around insurance to see if there's ways to enhance strategies, enhance tax efficiency that might not have ever come to, through the thought process, right? Because you think of it as just traditional insurance. Those are really where you can add some really creative ideas that are usually very exciting and really accomplish some great things.
Yeah, I appreciate that. And I know for everybody listening, I know how it goes. I mean, you're in your 30s, you think, got plenty of time. You're in your 40s, I got still plenty of time. You're in your 50s, you're like, I'm still pretty good. And in the 60s, you're like, I want to retire. I don't want to work like this anymore. So don't wait for that to happen. Plan ahead of time. I promise you, it'll cost you less and benefit you more. And you can rest. You can rest easy on the weekends. Skip back, take it easy, and know you got this part of your life covered. So Shannon and Mike, thank you guys again for doing this. I know we went a little bit long, but it's such an important subject. And I'd like to have you guys back again, maybe sometime in a few months, and we can go through some case studies, things like that. I don't even mind using my own life as an example if it helps somebody. So, and everybody listening, thank you guys for participating. God bless you all and your families. Remember, call Shannon 310-779-4679 or email sgoldsmith@wealthpoint.net. And when you send that email, go to globalinvestoragent.com. Click on there, get yourself an agent who's trained to work with you to find on and off market deals anywhere in the US, okay? And if you are an agent, click on there too to find out how you can become one of those, because that part of the market is becoming bigger and bigger. It's looming larger every single day. And please leave a review, guys. If you're listening, when you get home, please leave a review, because that's what makes the podcast world go around, and we really do appreciate it. So take care of yourselves. We'll see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.